the Fed is full of shit, and you can't really take anything they say with a grain of salt. I mean, in the respect that, going all the way back to 2008 when Bernanke said the subprime crisis was contained, only to watch it blow up a week later. And the same thing is true here. There is no inflation, and then it's okay, it's only transitory, and well, then it's structural, then it's contained. And I mean, everything that they talk about just seems to be mistimed. They're talking about, in this case, lowering the federal funds rate by 50 basis points because of their dual mandate of not only fighting inflation, but also making sure there's full employment. Well, the numbers, as we know, that come out of the Bureau of Labor Statistics are fugazi. We know that. They went back and adjusted 818,000 jobs, but that doesn't take into account the couple 100,000 that they did during the year last year. So over 1 million jobs just vanished, and they touted every single month what great job they were doing on fighting, not only inflation, but making sure that the economy was strong. And so inflation is in essence almost 4 times as high as they are telling us, yet they're touting 3% or just over 3.5%, right in that range, as where they're going to pivot. That's 60+% away from where they wanted to be at 2%. And they haven't tackled inflation. They haven't beaten inflation. In fact, they've raised the red flag to inflation, the way they always have, the way that all governments have, and in terms of normalizing their balance sheet or quantitatively tightening. You get rates up to 5% and the whole thing starts to blow up, just like it started to blow up in 2019 when they tried to raise rates and the subprime crisis happened, just like when the UK tried to normalize their balance sheet and raise rates. What happened? The pensions started to blow up, so they backed off, just like Japan tried to normalize their balance sheet and raise rates. What happened? The Nikkei collapsed, the Dow Jones collapsed, the markets in Singapore and South Korea collapsed. All of these markets collapsed. The carry trade, they backed off. So the point of it is that we've reached a point where we're trapped between inflation and austerity, and governments do what they always do, and that is to choose inflation. Now, the question becomes, what are the unintended consequences? Think about the yen carry trade for a moment. The yen carry trade blew up because rates on the yen went up a tiny bit and the yen strengthened. So wouldn't it be the same thing if the dollar loses ground and rates fall a little bit on the dollar? Because if you're lowering rates, the dollar should fall. And it's the exact same thing in reverse. Are there consequences lurking in the weeds that we don't see? What we are doing is reigniting the inflation engine. And I think that's why you see gold, which they tried to hit right after the announcement, but here it is, right back up to $2,600 an ounce, silver back to 31. I think that it's predictable. The question is, do they continue to go down this road and lower rates? If we do, you might as well just put your head between your knees and kiss the dollar goodbye. Because if we continue to lower rates and to give in to inflation, it's over for the dollar on a long-term basis. And what's interesting, you can kind of see that in a microcosm. They lower rates, and what was the first thing that happened? The back end of the curve went up. So the yield on the 10-year treasury went up as they lowered rates on the front end. And that's just, I think, the world's way of saying, you guys are idiots, and we don't want your duration treasuries of any duration, because why would we? You're going to inflate the hell out of the currency. You're manipulating the treasury market, and in fact weaponizing the treasury market, and your country's a mess. Why do we want your treasuries? Tell us why we should buy it when you're lowering rates, yet you're creating inflation as if money is going out of style. These are very interesting times, to say the least.
Let's cut straight to the heart of what's really happening with inflation, the Federal Reserve's policy failures, and why gold and silver are becoming more valuable by the day. You've probably heard a lot of jargon from financial analysts and politicians trying to sugarcoat the situation, but we're not here for that. We're here to bring you the truth, the whole truth, and nothing but the truth. As Andy Schectman has said numerous times, the Fed is either intentionally misleading us or they just don't know what they're doing. And honestly, neither option is very reassuring. Remember 2008? Ben Bernanke, then head of the Federal Reserve, assured us that the subprime mortgage crisis was contained. A week later, the global financial system nearly collapsed. Sound familiar? Fast forward to today, and we're hearing similar rhetoric. Inflation is under control, they say. It's only transitory, they insist. But the reality on the ground tells a different story. Right now, the Fed is trying to balance inflation and employment under its dual mandate. In theory, they aim to keep inflation around 2%, while maintaining full employment. But what they aren't telling you is that the inflation figures they release, currently around 3%, are wildly inaccurate. Real inflation, as measured by the rising costs of everyday goods and services, is closer to 10 to 12%, according to alternative economists who track these things outside of government data manipulation. Andy points out that the Bureau of Labor Statistics, BLS, has been quietly revising job numbers downward, erasing hundreds of thousands of jobs from the official reports. Over the past year, more than 1 million jobs have essentially vanished from the records, and yet every month the government touts how well the economy is doing. This ties into a larger issue: the Federal Reserve's inability to tackle inflation without blowing up the entire system. If they raise rates too high, the economy crumbles. But if they don't, inflation continues to erode the value of the dollar. They're stuck between a rock and a hard place, and they know it. Let's get to the crux of the issue. Why is everyone suddenly interested in gold and silver again? The simple answer: as the Fed fumbles and inflation runs rampant, people are losing faith in the dollar. Countries around the world, especially those like Saudi Arabia and China, are hedging their bets by stockpiling gold and silver. Take Saudi Arabia, for example. They recently made headlines for secretly purchasing 160 tons of gold from Switzerland in just 1 month. Why secretly? Because they don't want to spook the West. This isn't a one-off event either. Many countries have been quietly building their reserves for years. China has been doing this forever, and now Saudi Arabia is joining the party in earnest. They're accumulating gold because they see what's coming: a decline in the dominance of the US dollar as the world's reserve currency. Gold, unlike fiat currency, is a finite resource. It can't be printed out of thin air, which is precisely why it's been a reliable store of value for thousands of years. As central banks around the world start to shift away from holding US dollars and toward accumulating gold, you can see why it's a smart move for individuals to follow suit. So where does this leave us? Gold and silver are more important now than ever before. As the Fed continues to print money and inflate the dollar, the value of these precious metals will only rise. And it's not just individuals who should be paying attention. Entire nations are making this shift. Just look at the global landscape. Countries are moving away from the US dollar and accumulating assets that can't be printed or devalued. Gold and silver are at the forefront of this shift, and savvy investors are taking note. Whether you're looking to hedge against inflation, protect your wealth, or simply diversify your portfolio, now is the time to get into precious metals. As Andy Schectman likes to say, gold and silver are not just commodities, they're strategic assets. In a world where fiat currencies are losing their value by the day, it pays to hold something that has stood the test of time.
There is some truth in that, in the respect that the entities that are accumulating gold, largely the central banks, understand that holding dollars is not smart, that they will be eroded to inflation. And think of it from a standpoint of like Saudi Arabia, okay? One of the newsworthy stories is that Saudi Arabia secretly purchased 160 tons of gold from Switzerland in the month of August. And they say secretly because they didn't make a public announcement or any disclosure of the change in their official reserves. Well, China's been doing this forever. Most of the countries who accumulate gold don't want to tell the world how much they own, or they'll say, we're not buying this month, and then it's exposed that they were lying because the import numbers that are required to be detailed by the banks, well, they say otherwise. And I knew that they were still buying, but the point of it is that, think of it from your Saudi Arabia, right? So they've been loading up on gold, and they're trying to do it quietly and covertly so as to not upset the West. What did they do a few weeks ago? They said, hey, we'll still take dollars, but we're not going to do it exclusively. We're going to not re-up the exclusivity of the petro deal that's 50 years old. So what that says to me is that the hegemony is dead, not the supremacy. So they're playing both sides. But okay, let's just say we're Saudi Arabia, and the deal that we had for 50 years is we're going to sell oil to you through OPEC in dollars to the world, and then we'll take any excess and put them into treasuries. Well, the treasury side, you and I have covered extensively. I mean, they've been weaponized, right? We take Russia's $5 billion in treasuries because we don't like what they're doing, and we buy weapons from the military-industrial complex with it to give to the country they're in a war with, the Ukraine. That doesn't go over well to the rest of the world. We are supposed to be impartial. We're not. And by many people's estimation, we're more hypocritical and worse than anything Russia has done. I'm not going to debate that, but part of the world feels that. Okay, so the treasury market is not looked at the same way. And gold, which has doubled the performance of the treasury over the last 25 years, has no counterparty risk. Okay, fine. So we don't want treasuries anymore. We're going to buy gold with all the excess because it's better. The performance has no counterparty risk. That the Bank of International Settlements is reclassified as the world's only other tier one asset, that the central banks are buying at a level the world has never seen before and repatriating it, including Saudi, who brought all their gold home from the Bank of England and the New York Fed, the two traditional places of safety that would give access to the hubs of trading, the LBMA and the COMEX, or do you want gold? And I think that's what these entities are doing. They're saying, I don't want dollars anymore. They can be weaponized. They're being inflated. It's crap. I'd rather have gold, which has a much better track record, which can't be inflated, which can't be weaponized, and has been reclassified the world's only other tier one asset by the most powerful bank on the planet. The handwriting is right there. And you can see it. So it all goes back to this bullshit that we see coming out of the BLS, the lying to the world about inflation, about job creation, about all of these things. It's a lie, and I think much of the world understands this. Too bad the people in this country don't. Maybe the people watching you and I do, but yeah, this is something that's only going to get more and more acute, I think, as we see what the Fed will do, as they are trapped like a wild animal, literally between the forces of inflation and austerity. The only problem is austerity in this case means blowing up the whole system because they allowed it through 20 years of suppressed interest rates to become so leveraged that any chance to go back to any semblance of normal would mean having to blow up the system. You cannot have this system that we have right now without money creation. You cannot have a strong dollar without creating money to service the debt. And I think they understand that. So they're giving in and falling on the sword of inflation. So I guess we'll see what the next several weeks have in store for us, but I think this is just the beginning. I would expect it to get worse in terms not only of inflation, but also in terms of countries moving away from the dollar and choosing alternative assets as we lower interest rates, which is the worst possible thing we could be doing.
Take, for instance, the commitment of traders, COT reports that just came out. It looks like the commercial banks are pivoting. They're changing their approach. They've been covering their positions, and recently, they've done quite a bit of covering. But here's the kicker. The silver didn't come from managed money, which is usually the case. Typically, the managed money is what sells silver to the commercial banks, and that's how the game is played. But this time, it came from the producers. This signals a massive shift. Managed money refused to sell to the banks this time. Instead, it was the producers stepping in. What does this tell us? It tells us that we're getting very close to a tipping point. The commercial banks are realizing that being naked short in a market where countries like India can import 45 million ounces of silver in a single month is beyond foolish. It's financial suicide. It's like playing with fire, and now they're scrambling to avoid getting burned. When I look at silver today, up over $1 to around $31.20, I can't help but think that one of these days, they're going to have no choice but to let it run. When you're pushing against the natural flow of a market, the only way to manipulate it over an extended period of time is to eventually let it go in the direction it's supposed to. That's exactly what we're seeing here. The commercial banks are starting to realize that the game has changed. It's sink or swim now. I think we're also going to witness a time when these commercial banks start eating their own. It's not going to be about coordinated, collusive agreements anymore. The moment of reckoning is coming. For years, these 8 banks have been working together to suppress the price of silver. I've talked about this many times. This is no conspiracy theory. The data is there, but now it's becoming every man for himself. Once these banks realize that they're standing in quicksand, it's going to be every bank for itself. Now let's talk gold. Saudi Arabia made a huge secret purchase of gold from Switzerland, 160 tons of gold to be exact. That's not a small amount. What's particularly interesting is that they did this covertly. How did we find out? Swiss customs data. That's right, sometimes the truth slips out through channels like customs data. Most of these governments are secretly accumulating gold and silver and have been doing so for the better part of the last 3 to 4 years. This time, though, the Saudis got caught with their hands in the cookie jar. Let me ask you this. If they were caught buying 160 tons of gold, how much did they actually buy? How much slipped through the cracks? Gold that wasn't reported, bought through sovereign wealth funds, or other channels that aren't subject to IMF reporting or customs data? I'd argue it's a lot more than we know. Think about it. Why would they try to hide these purchases? Because they know something that most of the world doesn't. The dollar's hegemony is fading, and these nations are positioning themselves for a world where gold and silver reclaim their status as real money. One of the things I find utterly absurd is the way the Federal Reserve and the Open Market Committee manipulate interest rates. They're trying to gaslight the public into believing that inflation is under control, that they've got it handled. But anyone who's been paying attention knows that the Consumer Price Index, CPI, is a joke. It's designed to conceal the true level of currency debasement. The Fed just cut rates by 50 basis points, but look at what's happening with gold and silver. Gold is hitting all-time highs and silver is back above $31. What does that tell you? It tells you that investors are fleeing to real assets because they know the truth. Interestingly, after the Fed's announcement, we saw Treasury yields go up on the back end of the curve. That's a major red flag for the Federal Reserve. They're lowering rates, but long-term yields are rising. What does that signal? It signals that the market doesn't trust what they're doing. The bond market is saying, we don't want your debt because we know you're inflating the currency. Let me tell you, when the markets turn on the dollar, things are going to get ugly. You can already see it happening. The writing is on the wall. The world's major players, central banks, sovereign wealth funds, nations like China, India, Saudi Arabia, they're all quietly repositioning themselves away from the US dollar. Why? Because they know it's a sinking ship. I read an interesting article about John Paulson, the billionaire hedge fund manager. He's essentially saying what many of us have been thinking. He's warned that if certain policies are enacted, like massive capital gains tax hikes or corporate tax increases, there will be mass selling and the market will crash. And he's not wrong. We're sitting on the edge of a cliff, and these are the types of policies that could send us over. When you combine this with the fact that inflation is a hidden tax, it becomes clear that we're in a very precarious situation. Inflation erodes the value of savings, and it's the easiest way for governments to handle their massive debt burdens. We're at all-time highs in stocks, but we're also at all-time highs in deficits and national debt. At some point, the music has to stop. What's even more troubling is the fake jobs numbers that keep getting thrown around. Just last week, 1.3 million Americans lost their jobs, replaced by 635,000 part-time workers, many of whom are here illegally. The government touts these numbers as a sign of a strong economy, but when you peel back the layers, it's clear that we're in trouble. This brings me back to gold and silver. The fact that countries like Saudi Arabia, China, and India are accumulating these metals at an unprecedented rate should be a wake-up call. These nations are hedging against a dollar collapse. They're positioning themselves for a world where real assets matter more than fiat currency. You can see it happening before your eyes. The dollar is losing its reserve status, and gold is quietly stepping back into the spotlight. Central banks around the world are repatriating their gold, and they're doing it for a reason. They don't want to be left holding the bag when the dollar implodes. We're at a crossroads. The Fed can continue to lower rates and stoke inflation, but the long-term consequences are dire. The dollar's days as the world's reserve currency are numbered, and those who are paying attention are making moves to protect themselves. If you're watching this, take note. The game is changing, and those who are holding real assets like gold and silver will be the ones who come out ahead. This isn't just about making a quick buck, it's about preserving wealth in the face of a global economic shift. Gold and silver have been money for thousands of years, and they'll continue to be money long after fiat currencies have faded into history. So ask yourself, are you prepared for what's coming? Because the people who are quietly buying gold and silver certainly are.